It was like getting my guts ripped out when I had to deal with these 4 issues. But if we beat these beliefs, then we're well on our way to successful trading. There's 4 major ways that these tricky, sticky thoughts can hit your trading and hit it really hard. FOMO. I know we kick that term around a lot, but FOMO, you see everyone else making trades in the market. You think they're making profits. You think they're having a lot of fun time, but you feel like I have to jump in too, even if it's not the best time. That's a limiting belief telling you if I don't act now, I'll lose out, which can be absolutely a destroyer of your account because hasty, impulsive decisions is never a good place to be with your trading. And then you get lucky, right? Sometimes you have a few wins and you're feeling on top of the world and you're going,
Hey, I am the best trader in the world.
well, that's considered overconfidence. This belief can cause us to ignore risk and overplay our hand and stay too long, leading to, well, you might say they're unexpected losses, but if you're somebody looking from the outside, you're going, that trader's heading for a fall. Let me tell you a little bit about my own trading story. And in this, I'll show you how these certain sneaky thoughts and beliefs can mess up our trading strategies and choices, causing those annoying problems we all want to avoid. For me, transitioning into a master trader, it was like going on a journey from being trapped by these sticky thoughts to reaching a place where my mindset boost my total trading game. Those sticky thoughts are like a spider web that wraps around you and binds you and keeps you in the losing habits of trading. Recency bias, this is a big one. Here's when you think whatever happened most recently is what's going to happen again. We see it in trading, like if a stock has been going up, we expect it to continue going up, but the market changes really fast. And so this bias can blind us. It also comes into play if we've had like 2 or 3 losing trades in a row, we can start developing a thought that, dadgummit, I'm a loser. And that can be very dangerous. How this wraps up with the next one, I don't know. The recency bias and this one. But I know a lot of engineers are faced with this one, and it's called perfectionism. There's the belief that we must make the perfect trade every time. This can cause us to freeze up, miss good opportunities because the conditions just weren't absolutely perfect because we're scared of making a mistake. These limiting beliefs can sneak up and push us into making bad trading decision, impulsive, compulsive trading decision. I know for me, it was like getting my guts ripped out when I had to deal with these 4 issues. But don't worry, we're going to basically show you how to tackle these and how to spot them. Because if we beat these beliefs, then we're well on our way to successful trading. So, how do you combat FOMO? Well, first, take a step back before you jump into a trade and just double check, does this trade agree with my trading rules? You have a specific trading goal and do you want to stick to your plan? Remember, there's always another opportunity right around the corner. There's no need to rush into a decision just because other people are. Because you know what? Most of those other people don't have a plan and don't understand, and they're making crappy decisions. So don't get caught with the crowd. Overconfidence. Keep a trading journal. If I just ring the bell, bum, 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 keep a trading journal that will help you go back and look at your past trades for the good, the bad. We want to be like Mark Minervini when it comes to this type of thing. When he basically, on every trade, he looks at it not so much to critique it as much as asking the question, what can I learn from this trade? What can I do better? And if it was a great trade executed perfectly, what we can do is we can specifically celebrate those wins, celebrate what you did well, and that will help elevate and increase your psychological capital that you need for trading. Recency bias. Broaden your perspective. Take a look not just at the one single or last three trades, but look the whole body of work, longer term. You're going to find areas in there. Like if I'm trading a 65% win loss ratio trading system, then guess what? 35% of the time, I'm going to have losing trades. What does that translate to? It means that some of them could be right in a row. However, I know because I've tested it and I've proven it that 65% of the time I'm going to win. So I need to keep telling myself that so that recency bias doesn't mess me up. And then overcoming perfection. The solution, of course, is to accept that not every trade will be perfect or a winner. Matter of fact, all trades are basically a compromise. We control two things. We control when we enter, we control when we exit. What happens in between, we have no control over that. Get used to that. So set realistic expectations and be prepared to learn from every training outcome. So now that we've tackled the tricky and sticky limiting beliefs that what's the next step? Well, let's take a look at a couple of the technical tips that will also help you overcome these limiting beliefs. Have you ever felt overwhelmed by the clutter on your charts, the noisy, conflicting signals, or just the sheer weight of too many decisions while trying to trade? Some of that may be your own doing, believe it or not, because aren't we all striving for clarity, simplicity in our trading strategies? So let me take you back to a time when I was trading. My charts look like spaghetti. I mean, like the bustling city map with lines and X's. And I mean, I would even put bus numbers on my charts if I thought it was going to make me trade better. It was almost impossible to make an informed decision because I was going cross-eyed looking at the darn chart indicators. There was so much going on, the indicators, the lines, the notes, you name it. I thought more data meant better decision, and I was totally wrong. So if you fall into this trap, here's some things you can do to get rid of that pain in your life of the lost capital and lost confidence. Identify some core indicators that you want to use, and I would encourage you to actually to break it down to one indicator at a time. Learn how to use that indicator before you add anything else to your chart. If that indicator does not bring value to your trading, throw it in the rubbish can. Focus on a select group of indicators reduces the issue of too much data, and it allows traders to get back to a confidently approaching and the timely decisions that need to be made without the second guessing. And I don't know about you, but I've been frozen by the analysis of paralysis. And so what I find is if I remove the noise from my chart, in fact, I encourage the traders to step back every year or every 6 months, strip all the indicators, all the moving averages off of your charts and look at nothing but the naked price action. And you'll be amazed at what you see when there's less to see. Let's see if any of you catch on to that. Leave a comment down in the comment section if you picked up on that little subtlety. I love this next point because it also speaks to how well you understand your rules. But when you can start understand and recognize what your rules look like on the chart, that's when you're really starting to step into the place of being a master trader. It's like a sculptor almost that he they asked, I think it was, the guy who did the statue of David. Who was that guy? Michelangelo, that's who it was. Michelangelo, when they saw the statue of David, said, "How did you know that, wow, it's so beautiful," and that kind of stuff. He goes, "Well, I always saw the rock and it already had David inside. I was just setting him free." I'm telling you that just simply as a encouragement to learn the story that the charts are telling you. Consistent review and journal reflection. This is one of the major point that is overlooked by so many traders is they don't take time to reflect on what they've done and then make the adjustment. So they get trapped into a habit of repeating the same mistake over and over and over and over again. And guess what happens when you do that? You wind up developing the habits of a loser. If we take the next step, which is to focus on price action, concentrating on price action cuts through the noise and less reliable indicators like the indicators, but also things like the news. The people are trying to influence your emotions to help you make stupid decisions. You want to stay away from that. And I encourage you to just trade this chart that's in front of you. And so if you learn to do that, it will provide you a clearer picture of market sentiment, trend strength, and it leads to more grounded decision making. So, with these 5 steps in hand, we're not just tidying up our trading space, but we're honing in on the essentials of what you need. Simplifying isn't about skimming the surface, it's about drilling down to what drives our trading engine or our system. It's about embracing a clearer vision and not a cluttered one. So let's ditch all those old, worn out routines that have been holding us back. Oftentimes, it's not even a routine, but it's a habit that's been developed because you didn't have a great winning routine. And gear up for trading strategies that are lean, mean, and straightforward. Remember, the market won't wait for us to catch up. It's about making the right moves at the right time. So if you're ready to jump in, let's do this and trade up to where we belong. We've been talking about making trading a bit easier to handle, right? Well, I put together a little something that fits right in. And it's the audio version of my book, Trade Your Way to Freedom. Just imagine popping in those old earbuds and listen while you're doing whatever you want to do, be it chilling out, taking a run, or looking at the charts. It's like having a chat about trading without the screen. So why not give your eyes a break and let your ears do the learning? Here's the book, and I'll put a link down in the description of how you can get a hold of the audiobook. Hey, remember, trading is a journey and every step counts. Keep it simple, stay focused, and don't forget to tune in for these tips that we do every Friday